Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2025, and we're diving into the latest earnings report from Cellectis, a clinical-stage biotechnological company specializing in gene editing technologies. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cellectis has been making waves in the biotech sector with its innovative approach to immuno-oncology and gene therapy. I'm excited to discuss their latest financial performance and strategic developments.
Revenue and profitability overview. Let's start with the top line. Cellectis reported a significant increase in revenue, reaching $62.6 million for the 9-month period ended September 30th, 2025. This marks 170.3% year-over-year growth. John, what are the key drivers behind this impressive revenue growth?
The primary driver of this revenue surge is the collaboration with AstraZeneca under the Joint Research and Collaboration Agreement. The company recognized $61.9 million from these activities, which is a substantial increase compared to the previous year. This partnership has been pivotal in advancing their research plans and fulfilling performance obligations.
Despite the revenue growth, Cellectis reported a net income of just $589,000. Can you explain the factors affecting their profitability?
Absolutely. While the revenue growth is impressive, the company continues to invest heavily in research and development, which totaled $69.1 million. Additionally, financial expenses increased significantly due to foreign exchange losses and fair value adjustments on financial instruments. These factors have impacted their bottom line, resulting in a modest net income.
Operational efficiencies and future outlook. John, let's delve into Cellectis' operational efficiencies. The company reported R&D expenses of $69.1 million and SG&A expenses of $15 million. How is Cellectis managing these costs, and what does this mean for their future outlook?
Cellectis is strategically investing in its core research areas, particularly in developing its UCART product candidates. While these expenses are substantial, they are necessary for advancing their clinical trials and maintaining their competitive edge in the biotech space. The company has also managed to keep SG&A expenses relatively flat, indicating effective cost management.
Looking ahead, Cellectis has cash and cash equivalents of $52.2 million. How does this position them for future operations?
With their current cash reserves and fixed-term deposits, Cellectis is well-positioned to fund operations into the second half of 2027. However, they will need additional funding to continue their development programs and achieve commercialization. This will likely involve a combination of equity offerings, debt financings, and strategic partnerships.
Strategic partnerships and product pipeline. John, strategic partnerships are crucial for biotech companies. How is Cellectis leveraging its partnership with AstraZeneca, and what impact does this have on their product pipeline?
The partnership with AstraZeneca is a cornerstone of Cellectis' strategy. It not only provides significant revenue, but also accelerates the development of their UCART product candidates. The collaboration focuses on advancing novel cell and gene therapy products, which are central to Cellectis' immuno-oncology efforts.
Can you update us on the progress of their clinical trials and regulatory interactions?
Cellectis is actively progressing with its BALLI-01 and NATHALI-01 clinical trials. They recently completed end-of-phase 1 regulatory interactions for lasme-cel, which is a promising step towards initiating a pivotal phase 2 trial. These developments are critical for their long-term success and potential market entry.
Key takeaways. In summary, Cellectis has demonstrated strong revenue growth driven by strategic partnerships, particularly with AstraZeneca. While they face challenges in profitability due to high R&D expenses, their focus on innovative gene editing technologies positions them well for future success. John, any final thoughts on Cellectis as an investment prospect?
Cellectis is a compelling investment for those interested in the biotech sector, especially given their advancements in immuno-oncology. However, potential investors should be mindful of the risks associated with ongoing R&D expenses and the need for additional funding. Overall, their strategic direction and partnerships offer promising growth opportunities.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cellectis' performance in the comments below.